Hi, I'm Jason, and in this video I'm going to be showing you how you can pay less income or capital gains tax, or you can even avoid paying tax altogether. Now, this is completely legal, and in fact the government actually encourages to do this. So take note, stick around to the end of this short video and I'll be revealing why doing this is an absolute no-brainer. Now, don't get me wrong, I'm all for the taxation system and I do pay a lot of money every year in tax through income tax, corporation tax, dividend tax and VAT. However, I do something that also lowers my income tax bill every year and also increases my wealth at the same time. And I'm going to show you how you can do the same right now. Now, we've all heard of crowdfunding, right? And there are plenty of companies and sites out there that allow businesses to crowdfund. So basically this means that a new business will pitch their idea, and if the investor likes what they see, they can then invest a sum of money in that company. Now, here's the interesting bit. The government actually grants most of these companies with something called the Enterprise Investment Scheme. And basically, this is a way for new higher risk startup companies to raise finance. And the government actually reward the investors by giving them tax relief. Basically, this is a way for the government to boost the economy and encourage entrepreneurship, and it also creates more jobs. So what this means is, if you or I were to invest in one of these companies, the government would actually give us back a lump sum of money off our next tax bill as tax relief. So that means they knock a chunk off your income or capital gains tax. Now, who doesn't want that? So how much do we get knocked off our tax bill? Well, for example, if we invested £1,000 into one of these companies that was granted with the EIS investment scheme, the government would give us 30% of our investment back as tax relief. So 30% of £1,000 is £300, which immediately gets knocked off our tax bill for the year in question. And this applies up to £1 million worth of investments per year. Not only that, but you've also invested in a company that has the potential to grow quite rapidly. So not only have you lowered your tax bill, you've also increased your own personal wealth by owning shares in this new startup company. Another great benefit of investing in these type of companies is that most of them offer the investor a reward. For example, I invested in a company called Boulder Hut, which is an indoor climbing centre. And as I invested over £1,000, the reward was a couple of free passes, which was great because that meant I could take my 2 children as many times as I liked and it wouldn't cost me anything. Now, usually the more money that you invest, the higher the rewards that you receive. So if you look for companies that have good potential and you actually invest in companies where you're interested in what they offer, then you can really benefit from the free rewards. Now, let's say you invested in a new startup brewery, and one of the rewards is more than likely to be free bottles of real ale. Now, if you regularly drink bottles of real ale, then this kind of reward is really going to benefit you. So not only are you increasing your wealth and lowering your tax bill, you're also being provided with something for free that you would normally be paying for. Now, usually, the more you invest, the better the reward. So if you can combine choosing a promising company with something that you actually enjoy, then it certainly makes the investment worthwhile because you could actually end up getting something out of it for free. Over the past few years, I've invested in a number of these companies, including an indoor BMX track, Boulder Hut, which I mentioned before, a property app. There was also a company called Graphene Composites, and these have produced one of the most resilient materials in the world, which is now being used for the US military, the defence and aerospace sector, and they've even created a material which helps to fight against the coronavirus, which is always a good thing. There are literally hundreds of these type of companies popping up all the time. So if you do a bit of research and you find a company that has a lot of potential and you're also interested in the type of product they offer, then you're going to be onto a winner. The companies that we invest in could return many times your investment in a few years. If some of these companies that we invest in grow to be huge companies, or if they are brought out in the future, then you're going to be cashing in. If a company doesn't really get off the ground and doesn't really make a profit, then you still reduced your income tax bill and benefited from the free rewards. Now, there are a few things to note that might put some people off, so I just wanted to go through what you might call some of the pitfalls for investing in these type of companies. Firstly, you have to hold the shares for a minimum of 3 years for your tax relief to be active. So this type of investment is a long-term investment, so you've got to be prepared to keep your money in for the long run. I'd say at least a minimum of 5 years before you can even consider taking money back out of your investment. The second thing is you have to be a UK taxpayer. Thirdly, you must not be connected to the company in any way. So you can't be an employee or a director or have any connection whatsoever. And lastly, most of the companies that we'll be investing in will not be openly trading on the stock market, which means that you can't sell your shares whenever you feel like. So what happens with this type of company is they will have an exit strategy in place, which means further down the line, maybe in a few years' time, they will plan to sell that company to a larger company, or they might buy you out, or whatever the exit strategy is. You will have to wait until this happens to get your money back out. So taking all this into account, I highly recommend that you diversify your investments as much as you can. So if you were going to invest £5,000, say this year, rather than investing £5,000 into one company, I strongly advise that you invest in 5 separate companies. So you would invest £1,000 in each company just to diversify your portfolio. Also, we're going to be going into this for the long run. So your investment could be tied down for a long time. I'd say at least 5 years. So what happens if the company that we invest in goes bump? Well, if this doesn't seal the deal for you, then I don't know what will. Now, none of us want our investments to go bump or to lose any money. But investing in high-risk companies such as this, there's always a risk that this could happen. If the company that we invest in goes bust, the government will actually give us back even more tax relief on our losses. So not only do they give us 30% off the money we invested, but they'll also give us a big chunk of tax relief on the money that we lose. Now, hopefully that doesn't happen, but if it was to happen, then you're not really losing the amount that you've originally invested. So I hope you enjoyed the video, and don't forget to hit the like button. And if you want to see more videos like this, then don't forget to subscribe.